many really waiting in anticipation of the budget announcement for the next fiscal year. Run us through how markets are trading ahead of that announcement.
Well, I think the markets have shifted focus to the budget, and so we've seen a bit of a slowdown. We do expect that to continue until tomorrow, when people have already gotten a gist of which direction the budget is going to go, and you know, whatever changes there may be. Fortunately, we already had an inkling of what's going to happen in the budget, so probably some investors have already gotten into their positions already, although we will be looking out at that.
Well, looking at some of the sectors that are vying for a slice of the pie here, players in the tourism industry want this year's budget to set aside more funds for marketing and reinvestment. Just how high on the priority list does this sit for a government, in your opinion?
Well, it should be very high, and if it was, you know, if it was my say, I would give tourism a very high, very big slice, because I believe that when tourism, being one of the biggest earners for the country, would actually help to boost other sectors of the economy. However, it's been sidelined quite a bit in the past. We have recently seen a reorganization of the whole sector, the Kenya Tourism Board especially, and I think Kenya needs to be advertised more vigorously out there, and you know, more infrastructure needs to be put up to help the tourism sector. So yeah, I do believe that there should be more given to that sector, because the more we earn, the better it is for the economy as a whole.
Of course, we've got some calls getting louder for government to actually cast its net wider, so to speak, and extend the collection of the catering levy to all bars that are situated in urban areas in the country, in order to raise revenue and help develop tourism, as you say. And to cushion that a new VAT and catering levy, or to cushion that effect, that the tourism stakeholders propose that VAT levied on the hospitality industry is actually lowered from 16% to 10%. So let's take a look at implications of moves like these for players like TPS Arena.
Well, I think what they're looking for is really to boost the local tourism sector, because what happens with the tourism sector in our country is that whenever there is an economic downturn, you know, an international economic hiccup, then our tourism sector does not have the local support that it needs. And so cutting down the VAT and cutting down all how much it would cost actually to, you know, for the locals to actually become tourists or to enter onto the tourist scene would be a very good way of making sure that there is some sort of buffer for the tourism sector whenever we have such problems. Yeah. I think TPS Arena has had a good run this year, and I think that tourism is on the up and up. But I think the issue is when we have problems with the foreign tourist, what do we do? What do we fall back on?
Well, there's also players in the motor industry calling for moves to be made in their space, keeping fingers crossed, hoping to gain in some of the provisions this year, looking for an economic expansionary budget with the capacity to actually induce consumption and spur productivity. So what are your expectations in that regard?
Well, a lot of the motor industry is currently skewed towards the second-hand market, and there's also the issues to do with spare parts. So I think there needs to be some sort of legislature that ensures that those industries are protected and can grow. Yeah. But I think at the same time, for the new motor vehicles and those companies that actually have the dealerships for the new and unused motor vehicles, they also need some sort of protection. And we've had the 8-year rule, but I think that is still quite a bit of a window to bring in much cheaper vehicles from Dubai and Japan. So I think they would like to be given some more protection.
Well, just very quickly, earlier on in the show, we had Andrea Bonstead highlighting that they're looking to see more privatizations come to the fore as a result of the budget deficit that the government has to contend with moving forward. Just taking a look at what's on the agenda in that regard, are you expecting to see some heightening of privatization activity?
Well, most of the privatizations are well into the later stages, and so most of the transaction advisors are in place. Most of the work is already being done on the ground, and so I believe that we are going to see quite a few privatizations coming through towards the end of the year. Of course, what we are looking at now is market timing. We have about four rights issues coming onto the market, and those are going to tell us whether the market is ready for these privatizations and is ready for more IPOs. But I believe that the government needs to move faster. The sugar companies, the hotels, Kwal and all those are on the books already, and I think that they need the money, and therefore it means that they will have to be pushed faster.